do not change the situation changes us. So it is crucial to update, upgrade, and evolve as professionals. Our fourth technical session is a panel discussion on new regime of reassessment by illustrious panelists.
I request C.A. Nagangowda, Vice Chairman of Ballari Branch, to escort our moderator, C.A. Naveen Khariwal ji, onto the dais and welcome him with a floral bouquet. A huge round of applause for our moderator for this panel discussion, C.A. Naveen Khariwal ji.
A huge round of applause, please.
Very good afternoon. It is a great pleasure for me to introduce speakers and moderator of the session. They are all stalwarts, speakers of our profession. No introduction is needed, but I will introduce for the benefit of newcomers. Sri Naveen Khariwal ji, born on 15/8/1975, BCom FCA graduate, practicing as a chartered accountant and partner in SC Khincha and Company. Sir comes from a family of chartered accountants. Grandfather, father, and brother are chartered accountants. Member of Central Taxes, Corporate Laws and GST Committee of Federation of Karnataka, Chamber of Commerce and Industry, FKCCI, Bangalore. Member in Finance Advisory Committee of the Karnataka State Cricket Association, Bangalore, Karnataka. He is a speaker at seminars organized by various branches of the Institute of Chartered Accountants of India, WRC Mumbai branch, NIRC, ICA branch, and so many ICA branches. With this brief introduction, I will present before you Sri Naveen Khariwal ji to this August gathering.
Good evening to all the members assembled here. We are starting 10 minutes early, since I thought we have the cushion of time. So before my panelist, expert panel joins me on stage along with the immediate Principal Chief Commissioner Karnataka and Goa, I thought I will give you a brief introduction so that time could be saved and then we could jump into the questions straight away. Now basically the topic is about the new regime under 148. So you know, my dear friends, two amendments have been made, Finance Act 21, Finance Act 22. So before Finance Act 21, you know, the sections 148, 147, 149, 151, 152, 150 in certain cases, they were, you know, there since several decades. And the word used there was reason to believe in 147. So the word reason to believe, if you see my friends, you know, senior chartered accountants are there here, before 1987, you know, the word was information. That got substituted with reason to believe, and now reason to believe has got substituted with the word information suggesting that income has escaped assessment. Now reason to believe, you know, stood the test of time before several Supreme Court judgments, several High Court judgments over a period of time. So Finance Act 21, amendment were made. I recognize the presence of my panelist, K.R. Pradeep sir. Yeah, so as I was telling you, reason to believe was substituted with the word information suggesting that income has escaped assessment. Now, why was the amendment made? Why was it necessary? If you see reason to believe, there was a lot of arbitrariness, a lot of subjectivity. You know, and plus, you know, the specified approvals also under 151, etc. Then what has happened? Finance Act 21 amendment was made. Before that, I would like to take you to, I am going to narrate you a story. We are going to now March 20. Listen carefully. This is the background of 147. So March 20, you know, there was pandemic. Pandemic struck the entire world. So no different, it was for you, for me, for my client. So 20th of March, TOLA came in, Relaxation and Amendment Act, TOLA came in. Story starts here. So department was, if I were to use the word, they were sleeping for 5 years, 11 months, 20 days. Up to 31st March 2020, which year could have been reopened, outer limit is assessment year 13-14, March 20. And assessment year 14-15 was March 21. So for 5 years, 11 months, 20 days, department slept. March 20th, there was a lockdown announced because of COVID. TOLA came into play. No problem, sir. Amendment is for, your COVID is for everybody. So they gave extension. So TOLA is what? Only extension. That is also assented and signed by President of India. Absolutely, there is no doubt about it. TOLA has got the assent. Fine. So what happens? Notifications were passed. TOLA was announced. Due dates were extended. 4 times due dates were extended. Ultimately, 31st of March 21, and it was pushed to 31st of March 21 again till 30th of June. So what has happened now? 2 notifications, notification 20/21 and 38/21. These 2, what they did? They extended the time beyond 21 and they went up to June, 1st April and 30th June. Now what is the significance? In between what has happened? Nirmala Sitharaman has presented the budget. The old regime of 147 has been substituted with the new regime. Law has got the assent again. It has been passed by Parliament, etc. On 20th of March, Finance Act 21 is passed. After passing of the Finance Act 21, it has become a law. It has entered the statute books. You have the audacity to extend the due date further by virtue of a notification. Notification has overridden legislature. Fine. So they anyway passed the notification. They issued 90,000 notices. 90,000 notices between 1st of April to 30th of June 21, my dear friends. None of the assessing officer knew that amendments are made in March itself. Supreme Court came into the picture, Allahabad High Court, department preferred appeal with Supreme Court, Ashish Agarwal and others, Supreme Court. So what was the decision there? Supreme Court, Honorable Supreme Court is telling some leeway should be given. They are using these words, 34-page order. They are using these words, some leeway should be given to the department. Object of the section cannot be frustrated. Revenue cannot be made remediless. These are the words used by the Honorable Supreme Court. So they told whatever notices are issued under the erstwhile regime, under the unamended Act 148, shall be deemed to have been issued under the new Act under 148AB. Still department got leeway. They told some leeway, we cannot make you remediless, we cannot frustrate the objects of the Act. Also, I pardon you. 90,000 notices issued by 90,000 assessing officers all over India. We pardon you. You never knew there is NADT, there is your DTI, DTRTA, etc., training center. None of you knew that the Act has been already passed by Parliament. You continue to issue notices under 148, so be it. So, Supreme Court also came to the aid of the department. No problem. The old notices issued under 148 shall be deemed to have been construed to be issued under 148A to B, 148AB. Fine. So then 9 high courts, only apart from Chhattisgarh, all of them came down heavily on the department. All of them struck down the notification. Entire notification is not struck down. Please remember, ladies and gentlemen, those notifications are actually in the favor of the SSC because they have extended several time limits. For example, your exemption on 54, 54F, etc., everything was extended. The notification is only partially struck down to the extent that it has, what has happened is, extension of time is not an issue. But law having been passed on March 21, what the department should have done while issuing 1421, 148 should have been issued subject to 148A. Again, 148A, B, C, D, what has happened there? GK and drive shaft has been inserted now. It has been given a legislative color basically. There was earlier regime, what was happening, sir? Notice was issued under 148. We used to file the return of income. After filing the return of income, we used to ask for copies of reasons recorded. And department used to tell, okay, once you file the return, I will share with you copy of reasons recorded. Thereafter, you please file your objections. Once you file your objections, I will necessarily dispose of the objections by a speaking order. That was the, system adopted. That was a judge-made law. There was no such section in the earlier provision. Now, it has been given legislature color by 148A, B, C, D. Very beautiful provision introduced for the benefit of all the assessees. 148A says conduct inquiry. You please conduct inquiry. 148AB says after conducting inquiry, please give show cause. Once you give show cause, 148A, B, C says what? Please consider the reply of the assessee. Then D says, having considered the reply of the assessee, having considered the material on record, then pass an order under 148AD, saying what? That whether it's a fit case for assessment or not a fit case for assessment. This was the, sum and substance of 148ABCD. Everywhere approval is required now. Everywhere approval. 4, 5, 6 approvals are required. Everywhere if you see, they are telling take the approval. Department, the board came down heavily and they told more than, 3 years. Now the limit again, time limits. Earlier what was the time limits? Up to 4 years, beyond 4 years. Income escaping more than 1 lakh, beyond 4 years, up to 6 years. In case of a resident in India having any foreign asset abroad, which is undisclosed, undeclared, then that 6 years limit went up to 16 years. So up to 4 years, beyond 4 years, up to 6 years, beyond 6 years, up to 16 years, cases could have been reopened. Then when you come under the new regime, law says it is up to 3 years. We are happy that 6 years substituted by 3 years. So up to 3 years, beyond 3 years, up to 10 years. Now the law is crystal clear. If you say up to 3 years, I can reopen, no problem. What is the condition? Now they are selling reason to believe is not there. There is only information. What information? Suggesting that income has escaped assessment. I am in Finance Act 21. Only 2 types of information are there. One is RMS strategy formulated by board. What is risk management strategy formulated by board? If any information is there in that RMS strategy and then it amounts to information, you can reopen the case. Second type of information was what? Second limb of information is final. Word used is final objection of C and AG. Final objection of C and AG. So only 2 types of information. Therefore, my first is raising a query. For example, case is reopened. My friend Tarun was asking me, what about penny stocks? 70 lakhs. It's a penny stock case. 70 lakhs is the sale consideration. Now, the law is telling beyond 3 years you want to reopen, up to 10 years. Satisfy 3 conditions. Number 1, is there evidence, documents or books of account in possession of the assessing officer? You want to reopen beyond 3 years? Yes, sir. Law is telling, have you got documents? Have you got books? Have you got evidence? Beyond 3 years, up to 10 years. How many years should I maintain the books of account, sir? As per Income Tax Act 44A, I need not maintain beyond 6 years. So I don't have books of accounts. Books of accounts, say in a case, I don't have books of accounts. I have, removed the books of accounts. They are reopening beyond 3 years, up to 10 years. Department has to have documents, books of accounts as well as evidence. Fine. Then they should tell that income which is escaping assessment, I am only talking about Finance Act 21. It should be the income which is escaped assessment should be 50 lakhs and above. And again, that income which has escaped assessment should be in the form of an asset. The law is clearly telling it should be in form of an asset. In my case, penny stock. Don't think, that it is easy. Penny stock, we are going to tell, it's not falling under the term of the asset. Because asset, it is given. It is defined there. Shares and securities, bank deposits, loans and advances, cash balance, etc. That word asset is given. But here, if I am telling penny stock, for example, suppose there is sale consideration, that sale of shares, it is there in my bank account. It is already available in my bank account. Therefore, the department would take the stand that what is available in the bank account deposit, that may be an asset. That may be an asset, and hence, if it is more than 50 lakhs, if it has escaped assessment, then it may found information. But again, my dear friends, that information is not what is, suppose in this case, the Calcutta broker is there. Somebody is raided in Calcutta. Information, is given from the Calcuttas all over India. So, has it come through RMS or has it come through investigation wing, etc.? Information is shared. There are only 2 types of information. Therefore, it is a ground here. Here also there is a ground. So, here 2 contest. And this will be hotly contested. So, therefore, in my opinion, that may not be information based on RMS strategy or your final objection by C and AG. So, therein lies the catch. And then again, what are they telling? What about reopening? How many years could I reopen? 13, 14, 15, 16, 17. We will have an occasion to discuss this further. Now I would invite all my panel of experts as well as, Honorable Principal Chief Commissioner of Karnataka Goa immediate, he superannuated only on 31st of July. Shri Dinesh Chandra Patwari sir is here, and all my expert panel is also here. Shri Padamchand Khincha, Shri K.K. Chythanya sir, as well as Shri K.R. Pradeep sir. I would request all of them to join me on the stage, sir. Because we started the session earlier.
A huge
So-
round of applause for our panelists and the session chairperson.
I will request the chairman, Srinivas sir, please escort the speakers on the dais. Please.
CAH Padamchand Khincha, CAKK Chythanya, CAKR Pradeep, and session chairperson Shri Dinesh Chandra Patwari sir. We welcome you onto the dais and for this panel discussion. A huge round of applause, please.
I will introduce the speakers of the day. Sri C.A.H. Padam Khincha sir is a partner in H.C. Khincha and Company, Bangalore, having 30 years of experience in corporate and international tax regime. He is a prolific writer on various topics of income tax. He was instrumental in making a critical analysis of direct tax code as a member of team constituted by ICAI on the request of CBDT. It is our pleasure to have you, sir. Sri C.A. Chaitanya K.K., 50 years old, qualified BCom, FCA, LLB, rank holder throughout his career education. Then he has lectured at IIM, ICI and DTC of Income Tax Department and various other forums, presented papers in income tax, VAT, GST at various metros and other cities at forums of ICI, authored a book on special economic zone, country reporter for India for IFA Seoul Congress 2018 on withholding of tax. A hearty welcome to you, sir. Sri K.R. Pradeep is a graduate in business management. He has represented India in the World Moot Court competition held at New York and secured second prize for the country. He is a member of the Supreme Court Bar Association, President of Bangalore Income Tax Appellate Tribunal Bar Association. He has done pioneering work in transfer pricing. We welcome you to this panel discussion, sir. Thank you, sir.
ಚಾರ್ಜ್ ಆಗ್ತದೆ ಬ್ಯಾಟ್ರಿ ಲೋ ತೋರಿಸ್ತದೆ. 5 minutes, 5 to 7 minutes I will take, and I'll introduce Honorable Immediate Principal Chief Commissioner of Income Tax, Karnataka, Goa, Kerala. Then I would like to, discuss about the program, what we are going to start, and then I would request my panel members to take the questions. Now, if you see here, you have a very esteemed personality from the department. DC Patwari got superannuated on 31st of July after putting in 36 years of service. And what was his achievements while in office? Before this, sir was there in DJIT investigation, Chennai, Tamil Nadu. And before that, he was there as principal commissioner in Mumbai. So when sir joined Mumbai, the revenue was round about 25,500 crores there. And in his term, the revenue doubled to 52,500 crores. And from there on, he came to Chennai as DJIT investigation. And for that year, as DJIT charge, you compare all the DJIT charges, sir, there may be, I think, 13, 14 DJIT charges all over India. When sir was in charge of DJIT Chennai, highest number of cash seizures all over India. You take all the 12 DJIT charges together, total, take Chennai DJIT charge cash seized, it was the highest. Now you will ask me what happened next, what miracle he did when he came to Bangalore. So when sir came to Karnataka and Goa, we became second. In terms of tax collection, we surpassed Delhi and became second all over India, only next to Mumbai. Then apart, I would like to tell, one more minute, take a minute or so. He has done a lot of work for the infrastructure development of income tax department in Bangalore. What has happened was in Mysore, 6 acres of land worth today 100 crores was taken back. It was encroached, and in search regime, he went and met the CM 4 times. He met the governor. He went to finance minister and he told this land belongs to department. I want it back for my department officials, for my employees of the department. 6 acres worth land in Mysore taken back, worth about 100 crores. Then again what he has done is, your Ali Askar Road, there is that police station, I think, police commissioner's office. So I believe, they had encroached upon department's land. So he went to again knocking on CM's doors again. And 4 to 6 times he went to CM, he went to governor, he also went to finance minister. And now the CM has promised to allot one more land in Sanjay Nagar, Bangalore. Because of, and this is going on from past 30 years, 35 years. Again, I think one more about this land. When finance minister Nirmala Sitharaman came, he sat with her, he explained to her, and now I think beautiful 18-floor office will be coming at Queen's Road, which is income tax plus Benami unit. All courtesy our Patwari sir for the income tax department. So before handing over, the proceedings to my expert panel, I would request Patwari sir to address all of you for at least 5-7 minutes and discuss the, parameters of 148. Thank you, sir.
Very good afternoon, everyone. The dignitaries sitting on the dais and all the chartered accountants gathered here today in today's conference. It is really my privilege, and I'm thankful to Mr. Khariwal and the organizing committee to invite me for this function. Definitely, as he mentioned many things about my achievements in Bangalore and Karnataka and Goa region, I would give the credit of most of those, particularly the collection part, and we could have almost 20 months free from any kind of issues with the administration and anywhere. I give the credit to the chartered accountant and professional fraternity because they have supported me all along. I remember when I came and joined on 9th December 2020, that time VSVS scheme was going on and the response was not that encouraging at that point of time. I interacted with the professionals and all professionals and trade bodies, and we had very almost 2-hour long video, that web interaction. For I think everyone participated, more than 500 people were there in that, and after that we had lot of response, and this fraternity, this chartered accountant community has supported that wholeheartedly, and we could become number 2 in the country even in VSVS. Collection is definitely, you are the people who are guiding your clients and assessees to pay the proper taxes. And that could happen in last 2 years here during my tenure, and we could become number 2 in the country, basically because you have advised your clients in the best possible way, and they could come out without litigation. They chose to pay taxes. So that is, I think I give credit to all of you, and I got the credit because of the efforts and goodwill and good wishes from all of you. Coming to the topic of the day, the reopening regime, old and new regime. In fact, when I entered in the income tax department in 1986, even during training, we have been taught that this is the section and the provision you should remember in the best possible way. There are many case laws relevant to this, and after that, when I spent 10, 12, 15 years in the service in different capacities, I realized that if we have to identify one provision on which the maximum litigation is there, then it is 147 or 148. Rest of the provisions like 14A came later, that was also having the large number of litigation, but this 147, 148 alone had the maximum litigation. In fact, each and every reopened case, if you see first 2-3 grounds at Commissioner Appeal or Tribunal, High Court and Supreme Court, those are mainly on the justification, validity of reopening. And those were more mainly on the ground of reason to believe, whether there were circumstances or there were real reasons existing for reopening. So there were a lot of litigation on that. Then another issue earlier was the reason to believe should be consequence to information received, pursuant or consequent or rather post assessments. So even some information was available prior to the assessment, but that was not looked into by the assessing officer. Even that was a matter of debate whether assessing officer applied his mind or not, and there were decisions on either side. Then other very important thing, beyond 4 years. In fact, when I joined the department, the reopening could be possible for 16 years. Then it was reduced to 10 years and then subsequently 6 years. So beyond 4 years to 6 years, reopening was subject to when the reasons for reopening should be non-disclosure of material fact, and that should be attributable to the assessee. That was something probably in 90% of the cases in my experience, department could not really substantiate at different forums. So all cases beyond 4 years, only on technicality, even on merit or facts, we were very strong. Department made very solid additions, but those were knocked off at some stage or the other only on that ground. Then there were issue of change of opinion, that his predecessor considered this, issued a show cause or a questionnaire was issued asking this issue, and on that if the reopening was done, then there is a change of opinion. Then the reasons, that decision of Honorable Supreme Court in the case of GK and Saft Drive was very, very clear and landmark, and subsequent to that there was a requirement that once you record the reason in writing, after the return is furnished, filed, you have to give a copy of reasons to the assessee, obtain the replies, and then dispose that reason in writing as to whether there are reasons existing for escapement of income. All these have been subject of huge litigation. So considering all these, in fact, in the department forum also, many times we were asked as to how to reduce litigation, and there was unanimous opinion that we have to change 148 law, 148 provisions, because on that lot of issues on either side have come, some in favor of revenue, most in favor of the assessee, and that is really taking the issues right up to Supreme Court. So a good thing has been done by doing away with the old provisions and bringing a new law from 1/4/2021. But then unfortunately the timing was not correct. The country was under second wave of COVID, offices were closed, and on 31st March many of the cases which were supposed to be reopened even on extended period of 1 year, because 2020 March cases were also taken forward to 21 by amendment, and then at that stage also they were not in a position to do the reopening. So the amendment was again brought by Tola and it was extended to June. But then two parallel laws existed at that point of time. Old regime, as far as the department is concerned, till June for the old cases, and the new regime of course started from 1st April. And there were a lot of changes in the new regime. In fact, the requirement of reason to believe has been done away with, and the new provision based on the Supreme Court decision has come. 148A, A, B, C, D are basically replica of what Supreme Court decision has said. That if basically you identify the issue where the income has escaped assessment, and if it has really escaped assessment, you need some more facts to be gathered, then you make inquiries. And after making inquiry, don't make the reopening immediately. Give opportunity to the assessee. And then after opportunity, get the reply, and then take a call, considerate call after considering all the material and facts, and then pass speaking order under 148A, D, small d. So this procedure, as has been laid down in the Supreme Court decision, has been brought in the statute itself, and the objective was that after this whole process is done, the assessment, the reopening will not go to the assessment stage, because there are many informations received by the department by many sources, particularly where assessee has not filed the return, and there are tens of informations for property transactions, for mutual fund transactions, share transactions. All those are disseminated through FIU, and those are coming to the assessing officer. So on those information, it is possible that the assessment might not be required, or income might not have escaped assessment. So giving opportunity to the assessee at the stage of issue of notice itself was a very, very positive step, and I believe that only most genuine cases where positive income has escaped assessment would only come after that A, B, C, D is followed strictly and scrupulously. So I think the role of the council, chartered accountants are very, very significant in this regard, because when the notice is issued to the assessee, obviously they may not be familiar with the nuances of law and the requirements, and there the proper replies have to be furnished in totality, so that if the hunch of the department, that the information with the department is that escapement of income is there, at least they can bring out very clearly that there is no escapement because of these facts. So if that is done clearly, then I think assessing officer need to take a call that there is no requirement of reopening under 148. But unfortunately, as I said, those 3 transition periods, months from 1st April to June has really caused serious confusion, and Supreme Court decision has come in which again unprecedented power under 142 of Constitution has been used, and specific directions were given in respect of those 90,000 cases which has been dealt with, but again instructions of the severity is there, and there are still a lot of issues or dilemmas and confusions. So I'm not very clear whether in the transition period whether litigation will be reduced, because definitely there are 2 opinions on many of the facts and facets which I don't want to deal with, because the esteemed panel will be dealing with that. But definitely there would be many issues which might invite litigation. But I believe subsequent to this, once this transition gets over, there may not be much litigation on this account, because now the provisions are pretty clear. Within 3 years, whenever the information is there, which is also defined, 6-7 types of informations. Again, in the department, it is centrally processed through VRU, CRU. Assessing officer has no discretion to interpolate or rather put any information from his side. It has to come through system. So there is hardly any discretion left with the assessing officer. And then search and seizure cases, because 153C has been eliminated, has been omitted, and all those provisions in effect will be utilized through 148 only. So I believe that after this transition period is over, from next year onward, there may not be much scope of litigation if we apply the law in sincerity, both the sides, assessee as well as department. And I wish all the very best to all of you for the success of this 2 days conference. Thank you very much.
Thank you, sir, for your thoughts on section 148. Before you leave, sir, we would like to have a small felicitation ceremony and memento by our branch. Cheers, cheers.
Ladies and gentlemen, a round of applause, please. Huge round of applause. Once again, ladies and gentlemen, I request you to give a huge round of applause. Thank you, sirs.
Chris. Now I think we'll start the discussion, and we have prepared certain questions. Before this, I am highly indebted, and I offer my gratitude to the chairman for having given me a free hand, Srinivas sir, for having given me a free hand. We just discussed, and he gave me full independence to design the program. And then I got in touch with all the three speakers, and in fact when I got in touch with all the three speakers, Chythanya sir was traveling, and he was in Delhi attending Supreme Court matter. And they were kind enough, in fact, they scheduled a Zoom call that day evening itself, 4 o'clock, and all the three speakers came online, and he was attending a Supreme Court matter in Delhi. He saw to it that in the evening he also attended the Zoom call, and all three were kind of them. They told me that you only decide what question is to ask to be whom. We are not going to have any interference. Please design, please tell us the questions, and we are going to help you. So again, I would like to thank you, sir, for having cooperated and given me the full liberty to throw questions at you now. Now, before this first question to Shri Padam sir, before that, one introduction. As and when I rake up a question, I would be giving you some tidbit about the speakers. So first question I would be giving to Padam sir, and the question would be, let him discuss what is the new regime under 147 vis-a-vis the old regime under 147. So before that, I would like to bring to your knowledge of all this August gathering. There is a book which is written by a first-class cricketer, Sadbin Jung. It is called Subhan and I, My Adventures with the Angelino Legend of India. So in this book, the author, he writes like this. He says, cricket was most enjoyable in school, but I was making far too many runs, and it was a matter of time before I was pulled off into first class cricket circuit in India. I was selected to play for India under 22 game versus the West Indies. It was a hard track in Pune that we were pitted against the giants, for that is what they looked to us. We were still in school, and to play the West Indians who were looming way above us at that young age was really awesome. This is the book, the author is Sadbin Jung, he's written this. Now listen very carefully to this paragraph written by the author. The author says, I played because Padamchand Khincha, one of the quickest bowlers India has ever produced, fell and dislocated his shoulder on the morning of the match. He had gone in for nets without spikes and took ill. So that is why. So BCCI's loss is ICI's gain. So anyway, so this was the confession, not a confession in the course of search or seizure or survey, but a confession in the book of the author. So the first question, as I am asking my expert panel, first question, as I would repeat again, the old regime under 147, new regime under 147, contradictions or differences between the both, I request you to deliberate on the same, sir. Thank you very much.
Thank the Bangalore branch for having given us this opportunity to come and discuss a very significant topic. One of the most important changes that have happened in recent times is in the law relating to reassessment. As was rightly mentioned by the chief guest, that right from day they joined, it was mentioned to them that this is one of the most important sections, one. Two, one of the most litigated sections also. Three, interestingly also made an observation that despite the department having solid facts, there were cases where they were not able to push through and successfully conclude the assessment for a number of technical reasons. A case of reassessment means that the department is getting a chance to look into the state of affairs, the way in which the matters have been projected by an assessee all over again. They've had a first innings, they would like to have a second innings. Question therefore is the second innings to be allowed liberally, or is it to be allowed on the satisfaction very strictly of the conditions concerned? Supreme Court said in Parshuram Potter's case that once you are allowed time to lapse, we gave you an opportunity to do the assessment. We gave you sufficient time. If you have lost the opportunity, then lapse of time should induce repose and set at rest matters that have been long past. If we would like to reopen, re-agitate something that has happened in the past, you should be called upon to comply with the conditions very, very strictly concerned. So therefore, when the assessing officer is having the occasion or the need to assume jurisdiction, he has to fulfill certain conditions. And these are important. The question therefore is to set the pattern, set the background for what the changes have happened recently. And to understand that, we should possibly look back into the way in which reassessment law has evolved over a period of time. In my opinion, this can be broken up into three important phases concerned. The law from 1961 to 1989, the law from 1989 to 2021, the law from 2021 onwards. It's important for us to look into the law even from 61 to 89 for the reason that there were two specific reasons why they could reopen your assessment. Reason number one, 147 subclause A then was where the assessing officer has reasons to believe that because of the failure of the assessee to file a return of income or because of a failure on his part to disclose fully and truly all material particulars, income has escaped assessment, he could reopen under 147 clause A. More importantly, clause B was important, where he had definite information in his possession, very interesting, where he had definite information in his possession, which gave him reason to believe that income chargeable to tax has escaped assessment, then he could have invoked the provisions of 147B. So 147 clause B was built upon information, something that we are seeing today, that information suggesting escapement of income is happening under the new law. Therefore, if you would like to have some instructions, some guidance, some background of what information would be, we'll have to look into the case law pertaining to the years 1961 to 1989. There are a good amount of case laws, and therefore it's important for us to go back quite deep into history and find out what the law was then, how the Supreme Court has expounded the concept of information. 61 to 89. In 89, they tried to change the law. And at the time of the proposal, they said, when the finance bill was proposed to the parliament, they said, if the assessing officer is of the opinion, that was the proposal in the finance bill. There was a lot of hue and cry on this matter to say, we don't want an opinion, because the word reason to believe were there from 61 onwards. We are now trying to change that with an opinion of an assessing officer. This is not adequate enough. It gives arbitrary powers to the tax department to reopen cases concerned. Therefore, we would like to have the restoration back of reasons to believe. The representation from the SSC was accepted, and the government said, we are now restoring back reasons to believe. Therefore, the words is of the opinion was replaced by reasons to believe. And more importantly, at that point of time, there is a clarification given by the board that a change of opinion, if you were to make a statement, he is of the opinion, that means if he changes his opinion, that will give arbitrary powers to the tax department to reopen cases concerned. And therefore, they restored it back from the is of the opinion back to reasons to believe. This happened from 89 onwards to 2021. In 2021, we have a law now which says that if there is information suggesting escapement of income, that will enable the department to invoke powers under 147. The law from 21 onwards into transition to 22 has undergone a good amount of change. We'll have an occasion to discuss those changes and the importance of those changes concerned. Because what's important for us, therefore, to understand is that every word of this section has been the subject matter of intense scrutiny and has been a subject matter of challenge. The same is likely to prevail even now, that we are going to look into the law very, very closely. We're going to compare the wordings of the law with the wordings that were there originally existing. Try and compare the inter-se setting of the law, whether the definition in one section, wordings in one section are in tune with something else laid down somewhere in the other part of chapter 14, other parts of reassessment provision itself. This is going to be, in my opinion, an intense scrutiny about the exact wordings, and we will spend some time today. How much time will permit us, let us see. But we are going to spend some time possibly giving you some very good ideas, some extreme ideas, more with the objective of ensuring that we set our thoughts in process. We therefore try and explain to the clients concerned that this is worthwhile challenging, because obviously when a client gets a reassessment notice, he would like to protect himself. He would like to therefore find ways and means of challenging the action of the department concerned. And in that process, he is going to have an intense scrutiny of the provisions of law. Therefore, if there is an intense scrutiny of law, we may have certain extreme opinions possible. Our job would be to explore some of these possibilities, some of the apparent contradictions, some of the apparent shortcomings in the law today, solely with the objective of understanding the law and also ensuring that if there is an opportunity of challenge the action of the department, we are adequately prepared to challenge those actions concerned. But more importantly, we are looking at the transition and therefore the change. What was the law originally and what was the law today? This can be best understood if we were to try and compare the provisions of 147 that were there from 1809 to 2021, and then compare the provisions that are now introduced from 2021 onwards. What we therefore see is, earlier it was reasons to believe, now it is information suggesting escapement of income. Now, reason to believe, they said, has to be some sort of a conviction, some sort of little more than reason to suspect, little more than reason to be satisfied. Therefore, it was the highest stage of some sort of a close to confirmation, not exactly confirmation, but some sort of a reason to believe would mean that the person had good grounds to ultimately come to a conclusion that yes, there is income that ought to have been taxed, has escaped assessment. Today, if you look into the law as it is, information suggesting escapement of income. The word suggesting, if you look and start comparing with reasons to believe, we may possibly come to a situation that there is an attempt to dilute the standards in terms of making it a little more easy for the department to invoke 147. Now, possible, yes, if you look into the word suggesting, but if you look into the provisions that are there, what are the deemed cases of income escaping assessment, what are the actual cases of income escaping assessment, we'll have to then possibly juxtapose these situations governing the ability of the department to invoke 147, vis-a-vis the main body which suggests that there has to be information suggesting escapement of income. We'll have an occasion to therefore have a journey of the gamut of provisions concerned and then come to a conclusion whether the word suggesting is a dilution of the law or they are now trying to make the law a little more tighter. It's for us to draw this conclusion over a period of time, but what's important for us to be aware of is the fact that there is information suggesting escapement of income. This is one part of the story. Second, therefore, we will go forward and say that under the first body of the proviso itself, there was a case where it said, if you had a full and a true disclosure of income and you had filed your return of income, then beyond 4 years, the department was prohibited from proceeding against you. So although the time limit should have been 6 years or 16 years, but if you were satisfying the condition of the first proviso, full and true disclosure, then there was a limitation on the department to reopen your cases concerned. That proviso is not incorporated under the new law. Therefore, your full and true disclosure, whether it will be a protection available to you, is a matter for us to see over a period of time, our discussion today. But what's important for us to notice is that the first proviso to 147 is no longer there in the new law. There is a second proviso that was there in the 89 to 2021 law, which says that if there is an income emerging to you or is earned by you in relation to an asset located outside of India, then we'll have a reopening ability to go up to 16 years' time. That is coming from second proviso to 147. The second proviso is coming in an altered form under the new law today. We'll have an occasion to refer to that altered form as to when an asset outside India or the income coming therefrom, whether it will give rise to the department to reopen. But the second proviso is not there in its original language. It's coming in some altered form. It will have to therefore be careful as in what altered form it is now emerging under the new law. There is the third proviso, and that is interesting. The third proviso said that if the matter of an assessee has been taken in appeal, let us say the appeal has been taken into account for 4 additions, ground A, B, C, D, and all 4 matters are in dispute before the CAT appeals. Now, if the department were to find ground E and ground F, which are not the subject matter of original assessment, and they would like to therefore have a reassessment done in relation to grounds E and F, the question was whether it will be permissible or possible for the department to reopen, or you would allow the commissioner under his powers available under 251 to assess the income under ground E and F. Over a period of time, because of the limitation of the powers of the commissioner under 251, the courts were coming in favor of the assessee concerned to say the commissioner will have no powers to go into those matters not examined or not touched upon by the AO concerned. Now, therefore, to get over that limitation concerned, the third proviso to 147 was added to say that if there are grounds or matters or issues not the subject matter of appeal, then the assessment order is not deemed to have been merged fully. The assessment order continues to survive in relation to those matters that have not been carried in appeal, therefore enabling the department to reopen the assessments in relation to grounds E and F in the example we are discussing. That was the provision in the third proviso to 147. Interestingly, third proviso is not incorporated in the new law. Therefore, one interesting consequence that will arise is if a matter has been taken in appeal, the normal law should be that there has to be a full merger of the order of the assessing officer, because when an order of a superior officer comes in, it is a superior order that should survive. Therefore, one could now argue that there is a full merger that is happening in relation to all matters, whether considered or not considered. What survives now is the Commissioner of Income Tax appeals order. If that were to be the proposition, then the AO's order does not survive. If the AO's order does not survive, there should not be a case of invoking 147 in relation to issues that were not taken in appeal. But because of the fact that the third proviso is not there, one possible conclusion should be there is an absolute or a complete merger of the assessing officer's order with the CAT appeals order. Therefore, there should be no occasion for us to invoke the powers of 147. These are interesting consequences in terms of comparison of the law. Now, there was also the ability of the assessing officer to add any other income that he finds in the course of the assessment. Whether or not he has issued the notice under 148, those reasons have been captured. He has given reasons on 2 counts, grounds X and ground Y, basis on which he has now issued the 148 notice, started reassessment proceeding. He finds some other reasons or some other grounds on which he would like to make an addition. That was available to him under the main body of 147 and also by virtue of explanation 3 to 147 erstwhile. Now, the law has been retained in that form in the explanation today to 147. Interesting, but you have to be very mindful of the language there, and therefore I made a statement that you have to be very careful about the language employed in the statute concerned and try and find out what the law is trying to tell us. Are the changes comprehensive or are there lacuna, there are gaps now? So look at the way explanation to the current 147 is worded. It says very clearly that yes, I can make additions in relation to matters which I find in the course of reassessment. Any other income I can add to the grounds on which I have issued a 148 notice. And in relation to these grounds, when I am making an addition or trying to make an addition, the provisions of 148 capital A need not be complied with, need not be fulfilled. Therefore, I don't have to issue the notice, I don't have to pass an order under clause D of 148 capital A. I can proceed with my reassessment ignoring the procedure laid down under 148 capital A. Interestingly, the explanation does not make a reference, does not oust, does not remove the requirement of issuing 148 notice. It only says the procedure under 148 capital A is ousted. They don't make a statement that 148 itself is ousted. That makes it very interesting. Therefore, in the course of reassessment, if you find some other additions that you would like to make, under the erstwhile law, he would have had the freedom to make those adjustments concerned. But today the law says, no, I am only ousting the process under 148 capital A. 148, which was earlier ousted, is not by a specific mention ousted. Therefore, one could now naturally argue that what has been removed out, what has been ousted, what has been statutorily ignored is only 148 capital A. 148 condition that you have to issue me a notice, that condition remains. That becomes a very interesting matter for us to debate and discuss about. We also spoke about the reasons to believe, the change of opinion, the full and true disclosures. We'll have an occasion, therefore, to find out these were the protections available to an assessee under the erstwhile law. These were the protections available. What will be the procedure under the current law? Whether there will be a change of opinion as a shelter available to us, but the reasons to believe, not reasons to believe, the reasons recorded are important. Whether there is a case of full and true disclosure which will protect the assessee or not will be an important matter. We'll have an occasion to discuss and debate that in the course of our discussion when we answer the questions concerned. Under the erstwhile law, we had an explanation too, which said these are the cases where income shall be deemed to have escaped assessment, where you have not filed a return of income, where assessment has not been made, and the IAO notices income escaping assessment, where you don't file your transfer pricing report, when you have an asset outside of India concerned, where the income has been under-assessed, income has been assessed at too low rate, some excessive computation has happened in relation to a deduction or an allowance. Those were cases covered by explanation 2, where income was held to have escaped assessment. Explanation 2 is not there in the current law. Therefore, we'll have to go back by income escaping assessment all by itself, not by virtue of a fiction that was available to us under explanation 2 under the erstwhile law. This is an important facet for us to therefore remember. Now, what's important for us therefore to conclude? It's very interesting. Now, I'll give you a proposition for us to look into very carefully and have this at the back of the mind. There'll be further discussions happening. When the discussions happen, at the end of the discussion possibly, we'll have to come back to a proposition I'm trying to make now. And this is a very interesting proposition on a very literal reading of 147. What does 147 today talk about? It talks about a case where income chargeable to tax has escaped assessment. Then the AO may subject to provisions of 148 to 153. I'll repeat again. The words used are if income chargeable to tax has escaped assessment. The earlier wordings were if the AO has reasons to believe that income chargeable to tax has escaped assessment. The law today says it does not make a statement. if there is information suggesting escapement of income chargeable to tax, the law is not using those words. It talks about income chargeable to tax has escaped assessment. It talks therefore about a confirmed fact, talks about a categorical proof that has to be led by the department concerned to say that there has to be income chargeable to tax that has escaped assessment. Only then you enter into the doorstep of 147, then you go into 148 and 150, 148 to 153. This is one way of looking at things. The other way of looking at things would be, I will have some material with me, on the basis of which I'll make an inquiry. I will then issue a notice to the assessor concerned, call for his reaction, consider his reply, and then take an approval of the authority concerned and come to some sort of a conclusion that this is a fit case for issuance of notice. I issue a notice to him, call for him to file a return of income, engage with an interaction with him, and then come to a conclusion that income chargeable to tax has escaped assessment. Means I don't have to initially prove. I then undertake the process laid down under 148 and 148 capital A, come to some sort of a belief that income chargeable to tax has escaped assessment, and then come to 147. Is that leeway available today? It's a very interesting matter. We'll have occasion to please keep at the back of your mind this methodology, the terminology employed under 147, what is the way in which it's suggesting, what extent it wants the proof the department has to lead for them to enter the doorstep of 147. That becomes very interesting. It's also important on a side note to be aware of the fact that there are no independent special regimes for search cases and survey cases. All will now get covered under 148. So 153A is gone, 153B is gone in relation to searches happening after 1st of April 2021. Let us therefore have an occasion to go through the new process under 147 only. And more importantly, again another important point that we'll have an occasion to discuss today would be that there are various types of sanctions and approvals that are built into whole 147 to 153. Extremely important to see at what stage these approvals are to be taken. Very, very important. Who is the appropriate authority who is to give you the sanction concern? You will find that the authorities at different stages of action to give an approval are not just the same. At some cases it may be the principal commissioner, in some cases it may be the principal chief commissioner for the very same assessee. And when you pass an assessment order, it may be the GSCIT who has to give an approval. So we'll have to be very mindful of the fact that whose approval is required. Has the approval been taken of the appropriate authority, or they have gone mismatch in terms of the approvals to be taken, because the law is envisaging various distinct types of approvals at distinct phases and distinct and different phases of the entire process concerned. We therefore have to be extremely mindful of whose sanction, whose approval has to be taken, whether the approval of the appropriate authority has been taken, because courts are very clear. It has to be the sanction of that authority who is mentioned there, not a lower, not even a higher authority, not even a higher authority. You can't go to a higher authority and say, because I've gone to the higher authority, it's deemed to be the sanction of the lower authority who is now prescribed under the statute concerned. It's important for us therefore to be mindful of the sanctions and approvals at various stages. We'll have an occasion to discuss on this aspect concerned. What I'm trying to drive today is that there are a number of niceties in the provisions concerned. Niceties, fine things to be looked into, fine things to be appreciated. We'll spend some time on those niceties and fine things solely for the purpose of now enabling us to appreciate the differences and the changes and the nuances of the old law and the new law. And in the process of discussing the nuances concerned, if we find there are adequate grounds to challenge, wonderful grounds to challenge, we will find that yes, we should have an occasion to refer to, use and rely upon these challenges to successfully make a bid of resisting the action of the department that they are trying to do under 147. This is the broad overview. We'll have occasion to therefore, as the questions go about, discuss some further aspects of 147.
Thank you, sir, for the broad outlook as well as the difference between the section 147 under the old regime as well as the new regime. Now my second question is directed to Shri Chythanya sir as to what was reason to believe in the old regime vis-a-vis information with assessing officer which suggests that income chargeable to tax has escaped assessment. Whether the scope is enhanced or it is limited or it is only a reincarnation. And what about the judicial precedents interpreting the word reason to believe, whether they have become OTOs as of now, whether you can rely on those judgments? And also dispensing with the phrase reason to believe and replacing it with information available with assessing officer suggesting that income has escaped assessment, whether it has altered the scope and limitations of the powers to assess or reassess the escaped income as they were understood and interpreted before the amendments made by Finance Act 21. Sir.
Thank you, Naveen. You would know that under the old law, the precondition for issue of notice is to have reasons recorded in terms of 148(2). Which reasons to believe which ought to have been recorded before issue of notice under 148 under the old law, this is substituted by the requirement to have information suggesting escapement. Now the question revolves on the material difference between the reasons to believe which existed under the old regime and the information suggesting escapement that has come under the new regime. One, whether this difference is material, and if so, whether it has enhanced the scope for reassessment or has curtailed the scope for reassessment. See, by substituting reason to believe by information suggesting escapement, I would say that they have re-engineered the scope for reassessment. There is no categorical answer as to whether the scope is enhanced or scope is curtailed. In one sense, the scope is curtailed because the information suggesting escapement is given an exhaustive definition in terms of explanation 1 below section 148. There are 5 clauses. If and only if your situation comes in one or more of these 5 clauses, it would qualify as information suggesting escapement. So to that extent, the scope is confined to 5 situations. Under no other circumstance is there an information suggesting escapement of income. So in this sense, I would say the scope is reduced. But in another sense, scope is significantly enhanced. In what sense is it? Under section 148, explanation 2 will give 4 situations where it is deemed that there is information suggesting escapement. So deemed information suggesting escapement. If a search takes place in my premises, if a survey takes place in my premises, if a search takes place in Mr. Pradeep's premises and the valuables found therein are found to belong to me, or the books and documents found therein are found to relate to me, or information contained therein is found to pertain to me, then it would get into a situation of deemed information suggesting escapement. In this sense, the scope of reassessment is significantly enhanced. So there is no information suggesting escapement, it is deemed to be so. There is no question of erstwhile reason to believe. It is complete free play for the assessing officer. He can simply proceed to issue notice under 148. He wouldn't even have to follow the procedure of 148A if my situation is a search and a survey case. So in this sense, the scope is significantly enhanced. So this is one way of, understanding whether the scope is cut or scope is enhanced. And conceptually also, as Mr. Padam was trying to put, there is a material difference between reason to believe and information suggesting escapement. See, reason to believe was never defined. It was rather interpreted by various courts. Various decisions starting from Calcutta Discount 4190 or 191 till the Kelvinator in 328 or 561. The Honorable Supreme Court had multiple occasions to interpret the phrase reason to believe, and the consistent interpretation is that it's a subjective opinion. Hear me carefully. It's a subjective opinion based on objective tangible evidence. In this sense, reason to believe is very wide. sky is the limit for me to believe that the income has escaped assessment. The only requirement is I have to have tangible evidence in my possession, and there has to be a live link between the tangible evidence which I have and the belief which I have formed. So in this sense, reason to believe is very wide. However, information suggesting escapement, assessing officer has no role here. He has absolutely no role in the context of information suggesting escapement. It is well defined in these 5 situations. It could be through RMS, it could be through the audit objection, it could be through section 90 capital A information, it could be through the information verified and sent to him through 135A, it could be the court order. That's it. Beyond that, he wouldn't have any such thing. It's quite objective in that sense, where he has no discretion at all insofar as the information suggesting escapement is concerned. However, although I have said that the assessing officer has no discretion in the matter of information suggesting escapement, he could be ably supplemented by the department by pushing whatever information it wants to through 135A, that is e-verification, which will then become information suggesting escapement. The board can strategize its RMS, risk management strategy, in a manner where it would push in lot of information to the assessing officer, in which case, the board could supplement the assessing officer's ability to reassess you on the basis of information suggesting escapement. But whether it is reason to believe or information suggesting escapement, the Honorable Delhi High Court Justice Manmohan in Divya Capital 445 ITR 436 in paragraph 8 has clearly said that the underlying condition of income to have escaped assessment is mandatory. See, whatever be the information through RMS that would come, ultimately, as Mr. Padam pointed out, section 147 doesn't start with the words where the assessing officer has a reason to believe. It starts with the words where the income chargeable to tax has escaped assessment, which is a jurisdictional requirement of section 147. So the jurisdictional requirement at whatever stage it is will have to be satisfied, without which, without the escapement of income, whatever be the tons of information suggesting escapement you may have, there could be searches, there could be surveys, there could be deemed information suggesting escapement, but end of the day, there has to be escapement of income. In the absence of mandatory condition of income having to escape income, there cannot be a case of reassessment. So this is the point which needs to be very carefully kept in mind. Secondly, see, as I mentioned earlier, various courts have interpreted the phrase reason to believe. The most important decision is Rajesh Javeri case in 291 ITR 500. What did Rajesh Javeri say? It said that the reasons to believe wouldn't mean the conclusive finding that the income has escaped assessment. It is just a mere supposition that the income may have escaped assessment is good enough. But now that the foundational parameter has now been changed, now it is no more reason to believe. The decision of Supreme Court in Rajesh Javeri that a mere supposition that the income has escaped assessment, which would have then formed part of reason to believe, would not suffice for the purpose of invocation of jurisdiction over here. And there is one decision which you'll have to keep in mind, because of late you have been having a lot of writ petitions being decided, mostly by the Honorable Delhi High Court, followed by Honorable Bombay High Court. In Karnataka High Court, we have had a fleet of writ petitions getting filed on a day in and day out basis. And you have one decision in 2020-22, Tax Sutra 923 Mathura mercantile case, where the Madhya Pradesh High Court went to the extent of saying that the decision which the assessing officer takes, that is a fit case for issue of notice, is only a prima facie decision. So it toes the line of Rajesh Javeri, although the very edifice has undergone change. Rajesh Javeri gave this view on the basis that the language used was reason to believe, whereas in Mathura mercantile, in the new dispensation, the words reason to believe not being existent, with due respect, this very decision of Mathura mercantile of Madhya Pradesh High Court would require a review. The other aspect is, what are the limitations that have been brought out to the scope post the new regime. See, you compare the old regime and the new regime. Under the old regime, the trigger is the assessing officer forming reason to believe. So there is no trigger from anywhere else. It would have started from the assessing officer. Whereas now the trigger doesn't start from the assessing officer. Trigger starts from explanation 1 or explanation 2 to section 148. Is there an information suggesting escapement? is there a deemed case of information suggesting escapement, in which case, by virtue of first proviso to section 148, the assessing officer will have to necessarily issue a notice under 148A within brackets A. So to that extent, there is a change here. However, one important point that needs to be kept in mind here is, whether it is old regime or new regime, end of the day, it is coming under the category of reassessment. See, the section title of 147 has not undergone change. The regular assessments are always done under 143.3. Now we are dealing with a case of a reassessment. Of course, when you look at section 147, it talks about assessment, reassessment and recomputation. Whatever I would now say would be confined to the word reassessment that is used in section 147. Earlier law, present law, both use reassessment. So what is reassessment? Reassessment is not the same as review. Kelvinator's case 320 ITR 561 is very clear. We have separate explicit review powers in terms of section 263 and 264. We don't have review powers in the guise of reassessment under section 147. So whether it is old law or it is new law, under no circumstances can there be a change of opinion. If the opinion was formed, whether it is RMS, whether it is section 1991 or whatever, ultimately if it amounts to re-examination of the very same material which was already considered and a view was taken, even under the new regime, if permitted to do, it would translate to change of opinion, which will then amount to review, which is impermissible in the scheme of reassessment under section 147. So one view that could be taken is that the basic aspect of change of opinion, you don't find this phrase anywhere in section 147. However, the Supreme Court said, in order to avoid abuse of power, it is imminent for us to read the phrase change of opinion, which doesn't exist in 147. It's like, Ganga, Yamuna, Saraswati. Saraswati is Gupta Vahini. You don't see river Saraswati. So change of opinion is like river Saraswati, which is built into inherently in the very scheme of reassessment. And therefore, even under the new regime, there cannot be a review of the assessment that is already done. And one another important point which needs to be noted here is, again, the Honorable Delhi High Court in Divya Capital brought out one interesting concept. See, earlier we always knew that the reassessment cannot be resorted to making fishing and rowing inquiry. So many a times in the reason to believe, the assessing officer would have said, I need to issue notice under 148 for the purpose of verifying if the income has escaped assessment or not. Then the courts have said it would fail the parameter of reason to believe. It is just a fishing and a rowing inquiry. You should not be permitted to undo an assessment which is otherwise concluded, which, militate against the principle of finality brought out in Parshuram Pottery's case in 106 ITR 1, which Mr. Padam pointed out a little ago. So therefore, what the Delhi High Court Justice Manmohan in Divya Capital says is that, look, whatever inquiry you want to do, you do it under 148A within bracket small a, before even issue of notice under 148A within bracket small b. But eventually 148 notice, which is the culmination of your order passed under 148AD, cannot be for the purpose of making verification as to whether the income has escaped assessment or not. All such inquiries will have to be conducted under 148AA. It cannot be done post issue of notice under 148 for determination if at all the income has escaped assessment. So these are the points that need to be noted, and the material difference between the reasons to believe and the information suggesting escapement have to be borne in mind, and its attendant implications also will have to be very closely watched.
Thank you, sir, for the explanation on the words reason to believe versus information suggesting that income chargeable to tax is escaped assessment. Now, third question is to Sri K.R. Pradeep, sir, as to what is information suggesting that information has escaped assessment. And as you know, there are two types of information by Finance Act 21. One is that RMS strategy formulated by board, and one more is the final objection by C&DG. So I request Pradeep sir, what is risk management strategy formulated by board throw light on this RMS strategy formulated by board, and also in the next next Finance Act 22, the scope of information is further enhanced to it. What was 2 limbs earlier has now become 5 limbs. Sir.
Good evening, friends. Somebody said, more it changes, more it remains the same. And this new law is a mixture of something which has changed, which has remained the same, and something which is changed, which is inconsistent, and something which has changed, which we need to discover. There is one aspect which you will all appreciate, that this is the amendment to section 147 and 148. It has even beaten the fastest sprinter in reaching Supreme Court and getting a decision out of it. So, can you believe 90,000 notices were issued within a couple of weeks after this came? It is just that when they issued the notices, the match was already over. So consequently, they issued the notices in a somewhat a net practice or a practice session. And all of them came to be quashed by 8 high courts. And later on, even the Supreme Court had to approve the decision of the High Court that all the action taken by the department in issuing of notices, almost 90,000, which I will deal a little later. For a regular practitioner, it is very important to understand this concept in a very simple term. In a matter before Justice Krishnaiah, I believe the word purchase was to be interpreted. There were 2 very eminent senior counsels before Supreme Court who argued at length for 3 days. Finally, a 2-page judgment came wherein Honorable Justice Krishnaiah at the end of the judgment said, sometimes a suffocating scholarship arrives in the court where he is reminded of a escapist verse, where ignorance is bliss, is folly to be wise. Few things which are very simple, I would like to outline before I deal with them. There are 4 words you must remember. Information, suggesting, escapement of income. If any one of these 4 is missing, then the whole proceedings is bad in law. What is information? We don't have to look at any dictionary now. It has been explained in explanation 1 and deemed. See, in Income Tax Act, there is nothing which is without deemed. So, only thing which is not deemed is the taxation is real, whereas income is deemed. In fact, I was arguing in one of the matters where you are taxing me on a deeming provision. Why you want to levy the tax? Why can't you deem the tax? Which the court very respectfully declined. So, information, explanation 1 and 2, suggesting, as Padam said, opinion and suggest. I am in agreement with Padam. The word suggest is far more definitive than opinion. When it comes to interpretation of opinion, the courts have said, it is enough if there is a prima facie opinion, the opinion can go wrong if there is some material that is justifiable. The word suggest indicates that the department has to have a far more definitive view. It has to suggest and not some vague suspicion or a surmise. And there should be escapement. And what is the meaning of escapement? In Sun Engineering, the Supreme Court has already defined assess, reassess, escape. That means something which is assessed. While assessing, it has escaped. In the case of an assessment where already assessment has taken place. Where no assessment has taken place, the whole of that income is escaped. And the information suggesting escapement should be of income and not something. If it is only a capital account transaction and if that is what the information is, then it is not income. Unless these 4 limbs are not satisfied, then such a process or a proceeding can safely be called as invalid. The word information has been defined as an explanation 1 to section 148, and the words used there is means, which means exhaustive. So apart from this, there is nothing else which can be taken. The 5 instances are: 1, any information in the case of the assessee for the relevant assessment year in accordance with the risk management strategy formulated by the board from time to time. Insofar as the formulating of the scheme, there is one circular on 10th December 2021, wherein they have outlined various circumstances which the board has formulated as a risk management strategy, and that is available in the circular 225. Many components of that circulars in 2022 Act, they have incorporated within the definition of information. So when it comes to risk formulating strategy, you may refer to the circular as well as you also read the rest of the section. And what is important is such an information must be of that assessee and for that assessment year. If it is for any other assessment year or any other assessee, then this is not applicable. The second one is any audit objection to the effect that the assessment in the case of an assessee for the relevant assessment year has not been made in accordance with the provisions of this Act. If there is an audit objection which gives rise to a kind of a information that the assessment has not been done in accordance with the provisions of this Act, it would have been very easy to understand this. Instead of using the word provisions of this Act, as per law, if they had used, then it could have covered Act, rules, circulars, notification, judicial precedents and whole lot of things. By use of this word Act, it leaves open. I wouldn't say that whether this is not comprehensive. It leaves open to a doubt whether rules are also, suppose an assessment is framed contrary to the rules, whether it will constitute information within this subclass. And audit objection, earlier to this 22, this word came in 2022 Finance Act. Earlier to that, final objection of the Comptroller and Auditor General of India, which was more definitive. I would say that that should have been retained, but by bringing and diluting it to audit objection without explaining what is that audit, which which of that audit they will say. Audit objection, it is not, it is many times we have seen in our experience, several audits take place in the department, peer reviews take place, and those objections are given to the assessing officer who in turn replies to that, and many audit objections are dropped at the departmental level itself. So at what stage this objection is escalated into information? And that is another area of going to be a kind of a confrontation. And second, if that audit objection, for example, is against or it is variance with the judicial precedent. For example, if there is a Madras High Court decision and there is an audit objection in Karnataka, Madras High Court is not a jurisdictional high court, and then whether such an audit objection, if they say which is contrary to Madras High Court, whether it would still amount to information. And second, if there is, it is very much possible that more than one court takes a different view. And if audit takes one view and says the assessment is not in accordance with the law, and if the other case law is in your favor, whether it still amounts to audit objection which is sustainable or which constitute what you call it as information within this section. Like as I said, more it changes, more it remains the same. Third, information received under an agreement referred to in section 9090A. This is, I would say, a salutary effort, because earlier they would somewhere, some newspaper writes, Swiss Bank Indians are holding $100 billion, and immediately a notice is issued. And the assessee is expected to prove something which the department had to prove. Now that aspect, I think, has been straightened by providing that only information which is received under section 90 and 90A of the Act alone would be acted upon. Here again there are some anomalies. Section 90 and 90A is under the Income Tax Act, and information exchange takes place under relevant treaties. But under the Black Money Act, again they have enacted certain provision for exchange of information. Black Money Act is not Income Tax Act. Now the information received under the Black Money Act is not an information under Section 90A. Vice versa, what is received under 90A is not an information under the Black Money Act. So this is again an issue which I think will come to agitate. Any information made available to the assessing officer under scheme notified under Section 135A. This is mostly the information, faceless information they collect from all sources, from sub-registrar, banks, annual turnover, so many forms which everybody files, and this assimilation of that. And I believe a lot of this information is collated and made available to the assessee even before you file the returns. And now my colleagues tell me in the office that before filing the return, it has become a practice to look into that information which is available against your name and see whether that information is accurate or not. Just 2 days ago, 3 days ago, a case came up before Allahabad High Court. Allahabad High Court, in that case, what happened, some exporters seem to have received some 35 crores or 135 crores export proceeds. That is what the information says. And the exporter had only received 13 crores, which has been duly accounted. And he disputed that. The assessing officer under 148 capital AA, only inquiry he did is he received the information, and the specified authority blindly accorded permission, and a 148B notice was issued. When a reply was filed against 148B notice, D order was passed mechanically, and that came before the court. And the assessee was able to adduce all evidence in his reply before the AO that this information what they are having is incorrect, and he made valiant effort to correct that information online, which was not possible. He produced the bank certificate to show that he has not realized anything other than what he has already accounted. And the Allahabad High Court has already quashed the 148D order, and they have reserved and asked the department to file their objection why 50 lakh penalty should not be levied on the assessing officer. So, our dear CCIT was here. If he was here, I would have requested him to make one suggestion. All of you know, you must have watched this movie Rocketry about Nambi Narayanan. You know, he was a ISRO scientist. He was wrongly arraigned for espionage and sedition against the country, though he was one of the greatest eminent scientists. Recently, he was accorded Padma Shri. He was prosecuted, and it took 25 years for him to get his name cleared. And finally, the Supreme Court awarded 1 crore as a compensation and gave him further right to seek further compensation under law of torts for all the suffering that he had. So for malicious prosecution, 1 crore was awarded. Here again in the Income Tax Act, our institute should make all efforts to make sure that a similar kind of provision is brought in the Act, where a malicious reassessment is made or a total lack of application of mind. I believe the statistic says, I'm sure if you apply under RTI, somebody will give you this information, that more than 90% of the 148 notices were either dropped or the process resulted in no revenue to the government and a lot of harassment to the assessee. When you have a system, even under the old system, more than 90% produce nothing. And to bring in a new regime, especially when this government is guided by the noble principles of Maryada Purushottam Ram, who said, once I speak, I will not take back those words. Here again, why can't they do? Once they make an assessment, there should be no reassessment. This is against the principles of Lord Ram itself. To do a reassessment and go back, change opinion, what is all this? Not in Ram Rajya. And the last one is any information which requires action in consequence to the order of tribunal or a court. Here again, they have used the word tribunal or a court. Any information which requires action. See, any order for a court or a tribunal, typically under a civil procedure code, an order contains two portions. There is an order and there is a judgment. And judgment very clearly says what is to be done. So the order or a judgment is very comprehensive and clear, and that is what needs to be implemented, not because this provision says or anything, but because the law mandates that. So the words here is which requires action in consequence of an order. And section 150 is about finding. So there is some overlapping here. And second, order of tribunal or a court, it is not just confined to only Income Tax Act, but it extends to any other act. In fact, the Circular 225 talks about various orders of the court, including NCLT, insolvency, and so on and so forth. It could even be under PMLA. And apart from this, there are 4 other provisions under deemed information. Under deemed information, if a search is initiated under section 132 or a requisition of books under 132A, then the very fact that a search has been initiated becomes a deemed information. For friends, for your information, I had argued a matter in 1996, and the issue involved was what is the meaning of initiation in the case of a search? When exactly search gets initiated? When the Director of Investigation approves the search, or when the warrant is issued, or when the department causes an ingress, or when the department goes out. There are 4 or 5 benchmarks. Under criminal law, initiation means when the magistrate signs the warrant of search. Under Income Tax Act, that benefit is not there. Just recently, just 2 months ago, I was arguing that 96 matter, which were decided by the tribunal before Supreme Court, and Supreme Court was also laboring to give its own mind as to what is the meaning of initiation. Again, bringing back that word here, that what it means. In many cases, they may issue the warrant, but they may not conduct the search. In such cases, do you mean that the search has been initiated? This is again another question which has been there even under 158 BC, under 153A, all these issues. The second one is when a survey is conducted other than a survey by the TDS authority. The third one is where certain material belonging to you is found, seized in another person, then in such case also it is a deemed information. The fourth one is when some information relating or pertaining to you. The one is belong, another is pertain or relating. When it is found belonging to you or pertaining to you or relating to you, found in some other person and seized. See, the distinction is under the first one, 132 initiated. There is no need for a seizure there. When it comes to other person, there has to be a seizure. Unless something is seized, then these provisions cannot be invoked. Even though the information and deemed information has been exhaustively defined, but when it comes to application for a reassessment which is more than 3-year-old, I will tell you there is a Herculean responsibility which I think my friends will deal. Thank you.
Thank you, sir, for the insight on information under Finance Act 21 as well as 22. And he rightly pointed out that even in his office, they were telling that even before filing the return today, please go online and check up the various sources of information. Because now everything is computerized and information, is at a drop of hat, you have so much information online. So if you see there is AIS, there is TIS, etc. And you know that annual information summary, tax information summary, and what are the information available in 26 years. For example, the even post office SB account interest is there now. Bank account interest is there. That bank account you wouldn't have disclosed. So as he rightly pointed out, please before filing the return, go online, check, compare, reconcile all the information. It may be that if any bank account is also not disclosed. For example, the client wouldn't have shared that bank account details, so you wouldn't have taken your return. Now that bank account, because PAN, Aadhaar, bank, everything is linked, all that information will come online. Secondly also, for example, you have deposited 1 crore in bank. It may come online as 50 lakhs. Don't leave it as it is. there are columns under that which will say, you disagree, or, the PAN does not belong to me, etc. Go there and you please file your response. Because, for example, they may say there is a FD, sweep FD example, interest is, say, 10 lakhs. But there on the information portal, it is coming to 1 crore. Please understand, I will declare only 10 lakhs, actually, what I have earned as per my books of accounts, but that will become an information. Because I will talk to a lot of assessing officers, I ask them, sir, what is RMS strategy formulated by board? Tell me what is it, karke? What is the source of it? So one of the assessing officers told me, see, there is a VRU functionality. Whatever information is there, the JAO, jurisdictional assessing officer, the central circle officers, as well as, the wing, the investigation officers, what they do, they upload all the information on what is called as VRU functionality. From there, everything goes to board, which mines the information, then that is called risk management strategy. So whatever information goes there, it may be there are 10 types of information, but ultimately based on the software, based on the parameters fed in that RMS strategy, around 5 to 6 information only may see the light of the day. 10 information is sent from all the officers all over India. At least 6 to 7 may become RMS. So you have to be very careful here. And based on their, the 3 questions answered by the speakers, I am getting more and more convinced now. As and when you receive a D order, you know what is the solution. Knock on any of their doors and file a writ. As and when you file a writ, what are the advantages? You want to, if at all the case, as they pointed out various anomalies and various defects, if at all you go for a writ, what is the advantage? If at all you go participate in reassessment proceedings over a period of time after you receive 148D along with 148 notice, then the reassessment proceedings begin, 143(2) notice is issued, etc. And you will have to wait for the period, participate in reassessment proceedings, and then order is passed under 147 read with 143(3). If you participate, if you don't participate, it will be 144, and both will be read with 144B. Thereafter, when you receive the order, and if huge additions are made, take example of cash deposits, and it's a case of cash credit section 68, 69, 69 ABCD, cash credit, unexplained investments, partly disclosed investments, money, bullion, jewelry, etc., unexplained expenditure. That 69D is totally inconsequential, money borrowed or repaid by way of hundi, etc. When these additions are made, read with 115 BBE, the rate of tax will be 60% plus 25% surcharge. 25% of 60 is 15. 60 plus 15 is 75. 4% health and education cess. And then, penalty 10% of tax. How much is tax? 60. 10% of 60 is 6. 271 ASC. So therefore, the tax rate will be in that range. And again, the department will tell you to pay 20% tax. So the advantage is when I go for a writ, and based on the experts, when they argue before the courts, it is not faceless. They have a case, they will present their case before the, the judge, and then what you get is, if at all you win the writ there, you will get a stay. More importantly, you need not pay a single rupee to the department. As Mr. K. Pradeep rightly pointed out, in fact, now the judges have come down heavily on the department and they are levying cost on the assessing officers. As he rightly pointed out, 50,000, sir? 50,000, huh? 50 lakhs costs. So therefore, anyway, before going to my next question, I would now first, ask a question to Pradeep sir itself. How could you score 100 out of 100 in advanced accountancy CA final, and that record is unbroken record till today? Yes, sir.
I wrote in the exam. It is, I think the examiner was
also
overwhelmingly
to tell you, the paper was completed within 2.5 hours. He didn't even take that full quota of 3 hours also. Sir, you wanted to share?
I'm speechless.
So I'll go to my next question now. So now we have crossed the stage of information, and don't worry, at the end we'll be taking all the questions. All the 3 panelists have promised me we are going to take all the questions, but only at the end, people who stay at the end can ask questions. Yes, sir. The next question I am addressing to Sri K.K. Chythanya is about the steps involved in 148A. So he will take us to the steps involved, very important, because at each stage you can question the department. 148A, B, C, and ultimately resulting in order passed under 148AD. Before that, I would like to share one information. Recently, Chythanya sir argued a matter in Karnataka High Court. So it was about, our Bangalore Metro. And, I'll not go into much detail. Bangalore Metro had ordered for around 150 metro cars, And the department, as usual, they treated it as a fees for technical services contract 194J. And the demand, was 1,500 crores. The matter was argued well by Sri K.K. Chythanya sir, and Bangalore Metro won the case hands down. Now, so I would request Chythanya sir to, discuss about the procedure and also try to deliberate whether this procedure is only namesake or will it be religiously followed. Thank you, sir.
Before I would answer the question, couple of supplements to what Mr. Pradeep mentioned about the risk management strategy. We were struggling to know what is the risk management strategy and how is it defined. So I found one source which you could possibly go. Under section 135A, they have brought out an e-verification scheme. In that scheme, in clause P, they define what is risk management strategy. So for those of you who want to know what is this RMS, there seems to be very, like a broad and a comprehensive definition of what is RMS, which is given in this scheme. Secondly, we have this information suggesting escapement. In the decision of Allahabad High Court, which Mr. Pradeep was referring to, that is SR cold storage decision, just about 3 days before, where the Honorable High Court considered a levy of cost of 50 lakh of rupees. There, one of the defenses taken by the department is that the moment it is flagged as RMS, let us say I am the assessing officer, there is an RMS, then the plea taken before the court was that I have to necessarily go with issue of notice, otherwise it would mean, like me disobeying the RMS, and that could affect my career, and the disciplinary action may be taken. Then Allahabad High Court had to comment that, look, the decision to proceed with issue of notice is only and only of the assessing officer, under no stretch of imagination, merely because the RMS as such comes, that would not give him unbridled power to simply be carried away by the advice of somebody else. So the board or anyone cannot dictate the assessing officer, and it's eventually the call of the assessing officer, is also one important observation made in SR Cole's case. Now going to 148A. Section 148A essentially codified the GK and drive shaft principle. The only difference is, and a material difference is, in the case of GK and drive shaft, first you should file the return, ask for reasons, then file objections, get your objections overruled, then either surrender to the assessment or go on a writ. Here, the 148A proceedings would take place. You would get a notice under 148AA, you would respond to it, an order is passed, then comes 148 notice, and your question of filing return would arise much later. So that's an important difference between the GK and drive shaft principle and how it has been codified now. Secondly, it is not that the GK and drive shaft principle is wholly codified, because 148A procedure is not mandatory in all the cases. The proviso to 148A is extremely important. There are 4 situations which are covered under 148A proviso. Where you get covered by any one or more of these situations under the proviso to 148A, the question of following 148A does not arise. Without following 148A, he can issue notice under 148. So what are these 4 situations? One is a case where the search is initiated in my case, then there is a deemed information suggesting escapement, which I have already mentioned. 2, there is no need to follow the procedure of 148A. Secondly, if a survey takes place, it may be a case of deemed information suggesting escapement. However, 148A procedure will have to be followed. There is no exception in the case of survey insofar as 148A is concerned. The third and the fourth situations are where such takes place in another person and the assets found with him are found to be belonging to me, or the documents and the evidences and the books which are found with him are found to be relating to me, or the information contained therein are found to be pertaining to me. In this situation also, firstly, there is a deemed information suggesting escapement. Secondly, there is no need to follow 148A procedure. The assessing officer can straight away go ahead and issue notice under 148. And most importantly, which is added in 2022, and this come as an unwelcome guest, is the electronic verification of information, which is done under 135A, which information is passed on to the assessing officer in terms of the scheme which is brought there under paragraph 412, wherever there is a potential case of escapement, they'll push the information to the relevant field officers for the purpose of proceeding with the reassessment. And in all those cases where the information would come to the assessing officer under section 135A, now hear me carefully, no 148A procedure. Straight away on the basis of information which the assessing officer received under 135A, he can proceed to issue notice under 148 by completely ignoring section 148A. So before we proceed with the steps taken under 148A, it is therefore important for you to know in which of these 5 situations, 4 situations, 148A is completely dispensed with. Now, with this background, we'll come to wherever 148A has to be followed. In rest of the cases, apart from these 4 cases, 148A will have to be followed. And how it has to be followed? 148A has 4 clauses, A, B, C, D. Now, under clause A, the assessing office is having information suggesting escapement of income. However, he considers that this information is not ripe enough for him to proceed. Some info would have come under section 90, some info would have come under section 90 capital A, some information may have been received through RMS, but it is not adequate enough for him to proceed. So what he may do, with the prior approval of the specified authority, he may proceed to make a pre-notice inquiry. This is a new thing. This is not even there under what is suggested by GK and drive shaft. This is a new invention where before even he would issue a notice under 148A within brackets B, he could make an inquiry. And this is an optional inquiry. It is not mandatory for him. And what is mandatory for him is to, before he makes any such inquiry, he has to take the prior approval of the specified authority. Who is the specified authority? That is mentioned in section 151. There are 2 categories of specified authorities, up to 3 years one, beyond 3 years a higher official. Now, he has to take the approval under 148A within brackets A of the specified authority before proceeding with the pre-notice inquiry. At which point in time he has to determine how many years have lapsed. Depending on how many years have lapsed, he has to decide whose approval has to be taken. If he is taking it for multiple years, possibly he may have to take the multiple approvals because the 3 years and beyond 3 years may get spilled over between these many years. So this is an important point which as chartered accountants you will have to take note of it, so that that would be a good ground for us to challenge the very proceeding later on in the writ proceeding. Then what kind of inquiry would you have to do? His inquiry will have to be in respect of information suggesting escapement to make it more ripe for him to further proceed and issue a notice. And as he does the inquiry here, there is a limitation on the kind of inquiry which he can carry out. He cannot call the assessee and start making inquiries which he would have done had he exercised the jurisdiction as assessing officer. He has not yet become your assessing officer because he has to first issue notice under 148, and this is a pre-148 inquiry. So I would think that this inquiry will have to be made not with the assessee but with other connected persons. Secondly, as he carries out the inquiry here, the inquiry that he carries out cannot allow him to trespass into the role of the assessing officer. For example, take a case of your share capital, which is like introduced into your balance sheet that year. Section 68 is invoked. Under section 68, he has certain ability to ask certain questions, nature and source, and he will have to be satisfied about the explanation which he will have to furnish. If he is not so satisfied, subject to the two provisos which come thereunder, then whatever amount that is credited in a books of account could be deemed to be an income. Those inquiries which will have to conduct under section 68, he cannot conduct in terms of 148A within brackets A, because those inquiries that he would conduct under section 68 are to be conducted by him in the course of assessment, which is yet to begin by issue of notice under 148. So therefore, it is important for you to notice that there is a limitation on the kind of pre-notice inquiry that he would carry out. This is under 148A within brackets A. And as I said earlier, this is only a discretionary inquiry. It is not mandatory for him to every time conduct such an inquiry. Then, with or without this inquiry, what does it do? We'll go to next clause, that is clause B. In this clause B, he has to issue notice to the assessee. This is not the same notice as 148. This is a pre-148 notice, an additional notice which is not envisaged in GK and drive shaft. So in this notice, he would show cause to the assessee as to why a notice under section 148 should not be issued on the basis that he has information suggesting escapement of income. And if he had conducted any inquiry in clause A, the report or the result of the inquiry along with the information suggesting escapement of which he is in possession of, both will have to be given to the assessee along with the notice. It cannot just be a show cause notice, one page show cause notice stating that show cause as to why notice under 148 should not be issued to you. This notice has to necessarily be accompanied by two things: the so-called information that he has possession of suggesting that your income has escaped assessment. Two, whatever inquiries which he, at his discretion, he would have conducted in terms of clause A, the result of the inquiry will have to be made available to you. And Supreme Court in 444 ITR 1, Ashish Agarwal's case has made it very clear that this information has to be necessarily furnished to the assessee. And the Divya Capital's case, Justice Manmohan in Delhi High Court in 445 ITR 436, has also clearly and categorically stated that all this information without the askance will have to be given to the assessee. Now, he has to do it and give time to the assessee to respond. What is the time that he has to give? Minimum 7 days, not more than 30 days. If there is a notice less than 7 days, the notice is invalid per se and proceeding gets vitiated. So notice has to give you minimum 7 days and not more than 30 days. However, at your call, at the assessee's call, the 30 days could be further extended, and there is no outer limit for the extension of time. There is no outer limit for the extension of time. An indirect outer limit would be brought into through 149 limitation of time, beyond which assessing officer will not grant time. An assessing officer has no power to suo motu grant extension. If at all he grants suo motu extension, the suo motu extension granted by him will not exclude the time limit that would otherwise have run under 149. So only, see, if you look at 149 time limit that will be discussed separately later on, certain times would get excluded. What is the time that is excluded? The time that the AO has given to the assessee, that is 7 to 30 days, or further time which the assessee would have sought. If assessing officer suo motu gives extended time, the suo motu extended time will not be excluded from the limitation in terms of section 149. So this is a point that needs to be kept in mind. Now, with all this, the notice that you would have on hand, you will have to give a reply. And the reply that you choose to give will have to be considered by him. That is given in clause C to 148A. So under 148A clause C, he shall consider your reply. The word consider is extremely important. Courts have held that he cannot just pass a cryptic order without meeting with your objections. He has to make a proper order, and the order will have to speak his mind. Then comes the most important clause, that is 148AD. In this, he has to consider your reply and pass an order with the approval of the specified authority. Look at this. Unlike under the old regime, the approval of the authority would have been required only at the time of issue of notice under 148. As would be discussed later on, here the approval of the specified authority would be taken at several places. Now, before he passes an order under 149, 148A clause D, he has to have the approval of the specified authority. What kind of order would he pass? The order that he passes is whether or not it is a fit case for issue of notice under 148. Meaning, even if he has to pass an order that it is not a fit case for issue of notice under 148, even then it has to be with the prior approval of the specified authority. A very interesting question that would arise. Let us say I am the assessing officer hypothetically. I have taken Mr. Pradeep's reply in terms of 148 AC. I would think that yes, it's justified that it is not a case for me to further proceed. So I would pass an order stating that there is no need to issue notice under 148. Even that has to have the prior approval of the specified authority. What if the specified authority refuses to approve it? Can he interfere with the discretion of me in deciding not to proceed with it? It's an important point. You have some clue from SR cold storage case, the decision of Allahabad High Court, which has said that it is end of the day the discretion of the assessing officer. Then what is the need for approval of the specified authority for me to drop the proceeding? So we'll have some interesting development that could come here. What kind of order I have to pass here? Divya Capital Delhi High Court has very clearly brought out that the order which I'll have to pass here will have to be a speaking order. This is in line with what GK and Driveshaft said. When you file your objections, the AO will have to overrule your objection by virtue of a speaking order. Now there is a time limit for him to pass this order. He cannot pass this order whenever he chooses to. What is the time limit? Under 148 AD, the time limit for him to pass this order, whether to proceed or not to proceed, the time limit is 30 days from the end of the month in which the reply is furnished. Or if the assessee does not furnish any reply to the notice issued under clause B, then 30 days from the end of the month in which the due date to furnish the reply would lapse. So before that date, he has to pass an order. Now take a situation, he doesn't pass an order at all. He'll not pass an order. What are the implications? If you would not pass an order, is it a case of deemed refusal to proceed with your case or deemed acceptance of your objection? If it were so, where is the approval of the specified authority for it? Now, having not initiated any action within the stipulated time in terms of section 148 AD, and time has lapsed, can he reinitiate on the very same basis? This is an important point that needs to be noted here. Can he reinitiate on the basis of very same information suggesting escapement? Allowing him to do it would mean asking him to or permitting him to beat the time limit. See, he is directly barred from passing an order beyond the time limit of 30 days. And if he would not pass any order, and whereby he would subsequently issue one more notice on the basis of very same information suggesting escapement, that would amount to permitting to indirectly do what is directly prohibited from doing. So you have Ajmera Housing Corporation in 326 ITR 642, where the Honorable Supreme Court said that assessing authorities are not permitted to indirectly do what they are directly prohibited from doing. And they followed an old English case, Fox versus Bishop of Tesset, to say that this is the fundamental legal principle that if the law abhors you to do certain thing, you can't be permitted to do indirectly same thing. So therefore, in my opinion, if he does not do any proceeding within the time limit, then he has become functus officio. It is impermissible for him to again proceed to issue notice under 148A within brackets B on the basis of very same information suggesting escapement. The next aspect is, once he passes an order under 148 AD, see, normally our experience says that as soon as he passes an order under 148 AD, that would come along with notice under 148. Normally they don't keep any time intervention between the two. So as an assessee you would get both. What will you do with that? Can you go on a writ? It's a different matter that we have filed writs. Most of the writs are, like admitted and the stay has been granted, except that, as I've said earlier in Mathura decision of Madhya Pradesh High Court, wherein they have said that the order passed by the assessing officer is fine. He has a good free space to pass whatever order he wants to pass. He has made a prima facie view and therefore they have refused to grant the rule and they have rather dismissed the writ petition. However, there are still cases where you could go on a writ petition. What are the cases? Where your objections have not been considered, 1. 2, where it is time barred. See, limitation of time goes to the root of the matter, and the courts have held that the limitation of time is a jurisdictional aspect. And whenever it's a matter of jurisdiction, you can always go on writ petition. However, the difficulty would be when certain facts which you assert in your reply have been disputed by the assessing officer, and there is a disputed fact. When there is a disputed fact, the court as such may not normally entertain writ. You have in 2021 Radhakrishnan Industries 127 taxman.com 26 in paragraph page 27, the Honorable Supreme Court has said that where there is a disputed question of fact, ordinarily the high courts would refuse to entertain writ. So you have to be very careful when you go on a writ petition. You have to bring out the jurisdictional issues like limitation of time, like your objections not even having been considered, like the approval not even having been obtained. You know, these are the like in one case, we didn't have much of a ground because it's all disputed fact. Like it's a case of deemed dividend under section 222E, whether he's a shareholder, whether there's a concern in which shareholding is there or not. There are conflicting assertions on either side. On which point if you go to the writ court would say it's a disputed fact, we'll not get into. So what we then found is that the 148 notice was issued manually in a phaseless case. Then we went into section 151 capital A. There is a phaseless scheme, except where you come under exceptions of 144B, all the proceedings under 148A and 148 will have to be done only through phaseless, whereas in the instant case it is done by the manual officer. Therefore, it is going into the root of jurisdiction. So like this, as chartered accountants, you should be able to bring out the jurisdictional issues and bring it to the, like notice of the arguing counsel, so that your case would not be dismissed on the basis that it's a disputed fact. So these are certain aspects which will have to be kept in mind. So it's not that the writ remedy is lost even under 148A proceeding. Writ remedy is available provided you take adequate caution in respect of jurisdictional issues, limitation issues, approval issues.
I think we have last 5 minutes, so I have to now summon my fast bowler back at death to bowl the death overs. So I request Padam sir to throw light on limitations. Most important question of today's evening, 149(1)A. What about the reopening, read with the Supreme Court judgment, read with board circular, read with Finance Act 21. Reopening of assessment year 13-14, 14-15, 15-16, 16-17, 17-18, 18-19. Over to you, sir.
5 minutes, so many questions, worse than a T20 game now. Let us understand the law. And then quite a few of these questions will get answered automatically by understanding the law. What was the law earlier? 4 years reassessment normally. I can go up to six years time in particular situation where the income escaping assessment is more than 1 lakh. I could have gone up to 16 years if there were a situation where I have an asset outside of India and income therefrom was chargeable to tax in India, which has not been disclosed by me, 16 years time limit. In the case of an agent of a non-resident, originally the time limit was 2 years. By an amendment to law recently, it was made to 6 years time. So 4 years, 6 years, 16 years were the provisions of law. Now they are making a statement, we are now altering the time situations, that we will normally make it 3 years, within which you will have a power to reopen. And we will make it 10 years in particular situations where the income escaping assessment, subject to certain conditions we are going to discuss now, will be up to 10 years of time, we will have a power to reopen. So 4, 6 and 16 have now been truncated to 3 years and 10 years. This was by Finance Act 2021. Certain provisions in the Finance Act 2021 were there, which had to be extremely mindful of. We'll have to therefore go back to those provisions as they were enacted. Some portions have been removed by the Finance Act 2022, but for the notices issued between 2021 and 22, the law that was then prevalent would have to be therefore gone into to find out what did the law talk about at that point of time. Therefore, we'll look at the provisions of law that were in existence from Finance Act 21, that is from April 21 to March 22. There are two provisions that are important. For example, we were speaking about the deemed cases of information suggesting escapement of income. All the survey happening, raid happening, or in third party's case, some assets of mine are found. These are all cases of deemed cases. Now, there was below that deemed cases a statement made that this shall be held to be income escaping assessment for a period of 3 years. That period of 3 years has now been removed. Therefore, it can go up to 10 years time from Finance Act 2022 onwards. Therefore, for Finance Act 21, when it was prevalent, if notices have been issued prior to March 22, then you'll have a shelter again to make a statement that if you're trying to have these assessments made or reopened on the basis of deemed cases of information suggesting escapement of income, that fiction was only for a period of 3 years. It did not go beyond that. Extremely important point for us to be having at the back of our mind. Second also was in the cases of going beyond 3 years' time, the Finance Act 2021 had only one instance, income represented in the form of an asset. We don't have other two aspects of entries in the books of accounts or expenditure in relation to a transaction. They have been added by Finance Act 2022. They were not there by the Finance Act 2021. So if any notice has been issued between April 2021 and March 2022, we will again ask and find out what does this notice talk about. Does it talk about only asset income escaping assessment represented in the form of an asset? Then yes, you will have the time limit to go up to 10 years time. The other two factors or instances have been brought into the expenditure in relation to a transaction or incurred in relation to an event or an occasion or represented by entries in the books of account. Three situations therefore are extremely important: in the form of an asset, in the form of an expenditure incurred in relation to a transaction or in relation to an event or an occasion, and entries in the books of accounts. These sum total or individual total, if it is more than 50 lakhs, then it will give or empower the assessing officer to go up to 10 years time for the purpose of issuing a notice. There is a proviso there. That's extremely important for us. I'll come back to this aspect of 10 years and the asset and all of that. Before I let us complete the law and the question that Naveen was asking, there is a proviso to 149 which says that you will be disabled from issuing a notice after 1st of April 2021 if there was a disability upon you to issue a notice by virtue of the erstwhile law that was then prevalent. So prior to Finance Act 2021, you had 4 years time and 6 years time. If those time limits have worked in your favor, they have now elapsed, then the new law, which allows you 10 years in particular situations, will not come to rescue the department, and they will not therefore have the authority to issue a notice under 148. So what has worked in your favor in terms of limitation, the law explicitly recognizes that and say, if the limitation has worked in your favor already, then you will have no time, you will have no occasion or no authority to issue a notice under 148 merely because an extended period of 10 years is available. So the law at that point of time, if it has worked in your favor, we also have two Supreme Court decisions in K.M. Sharma's case and Gadgil's case, which says that if time limits have worked in your favor, then they do not get reopened because of the change in law thereafter. That's an important principle for us to bear in mind. So if time limits have worked in your favor, nothing happens. Now, under the new law, if I have to issue a notice today, it talks about 3 years time limit or 10 years time limit. So if 3 years time limit under ordinary circumstances means beyond March 2022, if you were to talk about 18-19, assessment year 18-19, the assessment year ends on 31st of March 2019, 3 years thereafter will be 31st of March 2022. Therefore, for that assessment 18-19, I cannot issue a notice post 1st of April 2022 unless I show that it has come into the 10 years time frame. So these time limits therefore have to be worked out independently depending on what law you are applying, to which period you are applying about, when is the law you are applying, and accordingly come to a situation for each year's concern. I understand what Naveen is talking about is a board circular on this matter, particularly referring to 15-16 assessment year and 18-19 assessment year. There will be reference to two aspects there, 15-16 assessment year and 18-19 assessment year. The board is saying that take action immediately. If you were to go into some detail in the board circular, there appears to be some sort of a non-appreciation of the correct law. Board did say, possibly, the way we discussed and understood was 15-16 assessment year, and this is the board circular issued on 4th of March 2021. So imagine a situation that by 31st of March 2021, some time limit would have expired. Therefore, the board said, if I am now issuing the notice for 15-16 assessment year, the 14-15 assessment year, 6 years would have elapsed by 31st of March 2021. Therefore, I am now prompting the department to take particular action concerned to initiate the appropriate action before the time limits would get expired by 31st of March concerned. So in that context, board issued one circular for one particular year. The board also said in the same circular 18-19 because they were worried about the 3 years time limit under the new law concern, and therefore they said, if I have to issue a notice within the 3 years time limit, kindly take particular actions, initiate the information going about. Let us therefore complete the formalities under the new law such that the 3 years time limit does not elapse. Therefore, you have to be careful about the law. When are you trying to invoke, under which law, under the old law or under the new law, and under the new law find out which year I am trying to invoke, go to the relevant provisions of the law and then see if the time limits are available or the conditions prescribed under various sections have been satisfied or not. Also, the second proviso to 149 makes it clear that if search has happened prior to 31st of March 2021, prior to March 2021, you will have the occasion to issue a 153A notice or 153 notice as the case may be. And therefore, there is no occasion for you to issue a notice under 149. Therefore, if a search has happened, let us say in March 2021, then what is the law? The old law will apply. It will not be a case where the search has happened under the new law, and therefore you will not be issuing the 148 notice, where the law says that you will have an occasion to issue 153A and 153C notice. That law will prevail. Now I come back to certain interesting consequences of going up to 3 years time, and the law says assessing officer has evidence in his possession, has books of accounts in his possession, has therefore accounting entries which show that there have been transactions entered into. No information, no material. Evidence, books of accounts or income which shows that income chargeable to tax has escaped assessment. In that situation, you can go up to 10 years time if the income is now more than 50 lakhs of rupees. Now, Chythanya, when we were discussing, was referring to certain interesting consequences on this, and therefore I'll refer to what he had made a research, and I'll therefore, because credit goes to him for all the research he has done on this matter. The law talks about evidence with the assessing officer represented in the form of an asset. What do you mean by an asset? There is at the end of 149 an explanation added which says asset shall include land, building or both, shares and securities, loans and advances, deposits in bank. Stops there. Asset shall include. No, Chythanya has mentioned they've done some research on this matter. The word are not used. Shall also include. It doesn't say asset includes. It doesn't say that. Therefore, the word shall include justifies a exhaustive meaning to this phraseology. You can't therefore add anything else. Shall include, therefore, doesn't mean includes. Shall also include, not there. Shall include to technically referring to a case law. It is equivalent to means. What does it mean? Therefore, asset only means land and building or both, shares and securities, loans and advances, deposits in bank. Jewelry not included, plant machinery not included, cash not included. So now this is a proposition for us to look forward tomorrow to say that if an asset notice is based on any other asset, then go back to the definition and say shall include refers to an exhaustive definition, nothing else is included there. Because if you look into the phraseology under 153C, they talk about money, bullion, jewelry, valuable article or thing. They have not incorporated those here. So one way of looking at things would be in a very, extreme way of arguing, but in a very legal way of arguing would be the word asset is defined in an exhaustive manner, does not therefore include anything and everything that has been not disclosed by an assessee concern. 1. 2. Look at the words now. It says represented in the form of an asset. Expenditure in relation to a transaction. Expenditure in relation to an event or an occasion. Therefore, there is only reference to 50 lakhs with reference to an asset. 50 lakhs with reference to a transaction. 50 lakhs with reference to an event or an occasion. Can I do that therefore? Let us have a situation where 40 lakhs is an asset, 30 lakhs is an expenditure in relation to an event. Should I aggregate this or should I make a statement? No. It has to be an asset separately. It has to be a transaction separately. It has to be an event separately because the words used in the next limb, entry or entries in the books of accounts. So when you start comparing third limb with reference to the language used in the earlier two limbs, you possibly may get a hint that the words used in the third limb are entry or entries. The words used are, if you look into the earlier law, before Finance Act 2022 brought in, if you look into 2021 law, represented in the form of asset. An asset was not there, represented in the form asset. Therefore, the words used are different today. If you go into 153C, they also talk about the proviso there, which talks about the aggregate of all of this under all the situations concerned. The word aggregate is missing in 149. So if you start comparing the language, you start therefore looking at the language very closely. Possible challenge tomorrow, somebody is willing to challenge. Look at this proposition concerned therefore, that the law very strictly looks at an asset, looks at a transaction. Possibly therefore, the limit of 50 lakhs shall be with reference to on a standalone basis, one asset 40 lakhs, second asset 40 lakhs, you will escape. One asset 50 lakhs, one asset 30 lakhs, will have a different consequence altogether. Therefore, I have to look into the transaction and analyze the law there and make or draw your own inferences whether it is possible to have a challenge, because on a standalone basis, the asset or the expenditure does not cross the threshold limit. This is one part of the matter. Therefore, it's extremely important for us to be aware of or be mindful of the language used. Take another situation which is covered by 149, 1 capital A. It says notwithstanding anything contained in subsection 1. That is 149 itself. Now, this 149 has, I gave a reference of 50 lakhs. Now, 50 lakhs represented in the form of an asset, represented in the form of an entry. So, take an example. I have earned 40 lakhs in 1 year. I have earned 35 lakhs in second year. Year 1, 40 lakhs. Year 2, 35 lakhs. I have put this in a building, 75 lakhs in year 2. Now, I have earned in 2 lakhs. Now, this income over 2 lakhs is more than 50 lakhs. Standalone basis is less than 50 lakhs. I have invested in the building concerned. Now, my undisclosed income is represented in the form of an asset. That is more than 50 lakhs now. If it is more than 50 lakhs now, then 149, 1 capital A is saying the income for the respective years, year 1 and year 2, may be less than the limit of 50 lakhs on a standalone basis. Therefore, the AO will have no ability to go beyond 3 years' time. But by 149, 1 capital A, we are saying notwithstanding anything contained in 149, if the income now over a number of years is represented in the form of an asset, which is of the value of more than 50 lakhs, then the AO will have the power to issue notices for all the years over which the income had been earned by the assessee concerned. Very interesting therefore. Take another situation therefore. Take another situation. 75 lakhs has been earned in 1 year by me. Invested over 2 years, 40 lakhs and 35 lakhs. 40 lakhs in 1 year, 35 lakhs in another year. Just take the other example. We considered first year 40 lakhs income, 35 lakhs income, and invested in an asset in 75 lakhs in the third year or second year. Take a reverse situation. 75 lakhs has been earned in 1 year, invested by me in 2 years, 40 lakhs in 1 year, 35 lakhs in another year. Now, income is escaping assessment by 75 lakhs. Therefore, the limit is crossed. But then the law says, notwithstanding anything contained in subsection 1, if it is represented in the form of an asset, then the question is this a situation where the limit is less than 50 lakhs each year? Therefore, I am now escaping the rigors of 149. This will depend upon the nature of asset. Let us say this is only one building, 40 lakhs in 1 year and 35 lakhs in the second year. That means the aggregate value of building is 75 lakhs. That is only a single asset. Therefore, the single asset is more than 75 lakhs. The AO will have the ability to issue notices for both the years concerned. Now, the question is, does he have the ability to go into 75 lakhs a year Possibly no, because it has to be now represented in the form of an asset. It has to go back to the 2 years concerned, because 149(1) capital says notwithstanding anything contained in subsection 1. Therefore, this becomes very interesting in terms of they're trying to protect the department concerned, that I may not be able to lay hands on the various issues concerned. Therefore, to go back to the way in which the income is represented, and they go back to the statement concerned to say that in these years concerned, if it is represented in the form of an asset, and the value of the asset is more than 50 lakhs of rupees, the fact that you've earned less than 50 lakhs in each year, which remains undisclosed, that will still enable the department to issue notices for all the years concerned, though for these respective years, the income escaping assessment is less than 50 lakhs. And when you start comparing the language of 149(1) capital A with the language of 149, you again find very interesting differences concerned. There were 3 situations covered in 149. Asset, expenditure in relation to a transaction, books of accounts, entries in books of accounts. The third limb, books of accounts, is not there in 149(1) capital A, missing. That has to be very mindful of. Second, come to the second limb, entries and expenditure in relation to a transaction or in relation to an event or an occasion. Out of this entire sentence, the first sentence is not there in 149(1) capital A. Expenditure in relation to a transaction is not there in 149(1) capital A. What is covered in 149(1) capital A is expenditure in relation to an event or an occasion concerned. So, what can therefore trigger the notice under 149(1)A is a small subset of the entirety of the situations covered under 149. We have to be mindful of this, look into the exact play of 149(1) capital A, and only thereafter decide whether the AO is justified in issuing the notice under 149. So there are very interesting circumstances. The language therefore has to be looked into very closely. You can therefore, not only these are limited circumstances, start applying your mind a little more carefully, a little more intensely. You will find many more situations of challenge available to make a statement that the entire action initiated by the department is wrong.
So we have reached the end of the session. Moral of the story is compare Finance Act 21 with Finance Act 22. Finance Act 21, 3 conditions. You want to go beyond 3 years up to 10 years. So what you want? First, beyond 3 years up to 10 years, assessing officer should have in his possession books of account, documents, evidence. Number 2, income escaping assessment should be escaping 50 lakhs and above. Number 3, it should be only in the form of an asset. What are those assets? Given there, only 4 illustrations in Finance Act 21. Come to Finance Act 22, they enhance the scope of the asset. Finance Act 21, if at all your case is reopened in that Finance Act 21, asset is including only those 4 items. Therefore, 43B, if there is yes, income escaping assessment, you cannot touch. 40IA, tax deducted, not remitted, you cannot touch. 43B, you cannot touch. 40A1, TDS non-residents, you cannot reopen. And again you take 40A3, etc. So if, because the word asset does not include all these. So these all are, it will definitely call for litigation. Come to Finance Act 22, asset is enhanced. It says asset or expenditure in relation to an occasion or event or transaction. Because if you see this GST, etc., fraud purchases, etc., it will not come in that Finance Act 21, because the word used asset, I told you, it had only 4 components. When you come to Finance Act 22, very cleverly, but it is not retrospective amendment. It's only applicable from Finance Act 22. So asset, and again, then you come expenditure in relation to a transaction or in relation to an occasion or event, and then the dangerous word is books, entries, as he rightly pointed out, entry or entries in books of account. Therefore, any entry for that matter, the assessing officer does not understand. He can take that entry or entries in books of account can lead to an escapement. The last difference is Finance Act 21, what it said, 50 lakhs for every assessment year. Whereas Finance Act 22 says now the department scope is enhanced. Beyond 3 years up to 10 years, it may be 10 lakhs in 1 year, another year 20 lakhs, another year 20 lakhs. I would have reached 40, 45 lakhs. So what the assessing officer will do, anywhere to reopen, I have to almost reach 50 lakhs. So I'm going to call out your sundry business expenses, tea, coffee expenses, etc., conveyance expenses. You are not able to give me the vouchers or, the bills, etc. I will take that 5 lakhs also and include it in the income such that my income goes, which is concealed income goes beyond 50 lakhs, so that the cases could be reopened. At the end, I would like to thank my chairman, Srinivasti, for giving me a free hand, all 3 my panel members, experts, and also for your information. Padam sir and Chaitanya sir are now doing a very noble work. They are updating the great commentary of Sampath Iyengar's, and already 3 books have come out in the market. Bharat's publication is there, and as well as Tax Sutra. One is your, it's online, and one more is a physical hard copy. And these 3 copies, total pages as of now updated by both of them, they have put in enormous time, put in enormous work. 4,496 pages for the 3 volumes. Every line is updated, full stop, comma, interpretation. Again, as Chaitanya sir was telling me, it may go around about 12 volumes and it may reach 20,000 pages. Next month, another 3 set of volumes is coming out. By that time, both of them would have gone through at least 10,000 pages. Therefore, you are in safe hands, don't worry. Whenever you receive 148D order, now you know on whose doors you have to knock. Thank you, ladies and gentlemen.
Thank you so much, sir. We always thought CA is a logical game, but today yet again you guys proved that it is a verbal puzzle too. Now I request CA Nagan Gowda, Vice Chairman Bellary Branch, to kindly present vote of thanks.
Thank you, sir. Thank you for your valuable time and sharing your knowledge and making this panel discussion fruitful and useful to members. Now, we want to present a memento to the speakers as a token of love and affection. I call Sri Chandan Hegde, please, Pastor President of KCA. Present, sorry. Present the memento to the Padamchand Khincha, sir. I request Raghavendra Shetty, past president of KCA, to present a memento to CA KK Chythanya, sir.
A huge round of applause from our side as well as from Namma Metro
I
side
request
to KK Chaitanya, sir.
Chandrasekhar Shetty, past president KCA, to present a memento to KR Pradeep, sir.
A huge round of applause to Pradeep, sir, for, I don't know how scoring 100 on 100 in CA finals. It still remains a mystery for all of us, sir.
Now I request CA Tuppad, MC committee member. Okay. Yes, sir. Present a memento to Naveen Khariwal ji, sir.
A wonderful moderator for this panel discussion. Thank you so much, sir.
Thank you, sir. Thank you for giving me an opportunity to present here. Thank you.
Before parting, last 30 seconds, I have some sage advice for Pradeep sir. So I hope he listens to this advice. As his biodata anyway we have introduced. His wife Anuradha is, practicing senior advocate last 28 years. LLM from London University. Son Anirudh, is working in a bank and MS from economics. Daughter Parinita is LLM from New York University, specializing in competitive law. Therefore, I have a sage advice that don't argue in your house at the dining table because you cannot bill anybody.
Even the bright shining sun will have to set at the end of the day, but surely with a promise to come again next day. Similarly, our state level conference too is close to the